a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman following Steve Rhodes, 9 o'clock to 11 o'clock. I come in Monday through Friday, 11 o'clock until noon Eastern Time. Today I'm followed by Nico Dahan and Paige comes on, and Nico and Paige come on with a health program. If you haven't heard it before, stay tuned. You will learn a lot. Just fabulous newsletter he sends out, and great discussions on basically keeping your mind and your body healthy. And that's really it's a great interlude between the trading session on a Friday. And then, of course, got Daryl Martin. I'm not sure if Daryl Martin's coming on today. He and Tom are down. Hey, you got less than a couple of hours in which to sign up for tomorrow's fantastic 4-hour. We can call it a workshop, but boy, this is more than a workshop. This is like a class that's been given between Tom and Daryl down in San Francisco area. Go to the front page of TFNN. Check it out. It's near the airport, I believe, San Mateo. So, Daryl will not be in today. Okay. And then, of course, you got Dave White. You got Ken Shreve. Just great hosts. Then, of course, 4 o'clock till 6 o'clock, we will have whoever's sitting in for Tom O'Brien. Hey, let's go to the numbers. Today, now this is so interesting. On the E-minis, today is still a higher high in the chat. Let me just, for those of you who are new to my methodology, under the umbrella, the auspices of the ChapmanWave, the core of the ChapmanWave, basically the trademark itself is that from an identifiable lowest trough, you can make troughs on the downside. You can make 4 higher peaks to at least a peak D. You can still go higher. You could fail, but most importantly is if everything's intact, you should go to at least 4 higher peaks. That's what I'm expecting from the Dow and the S&P and even the Qs, that next week we make the requisite a leg and then peak D. At that point, we've got to become somewhat cautious. We'll just deal with that. Meantime, back at the ranch, Steve Rhodes is sitting in for Tom in the first hour this afternoon. Great. So what we're looking at here is the Dow is down 40 at 14,498. The S&P is at 1559, down 3.5. Hey, after all that bad news with all the banks and J.P. Morgan, might even get to talk about J.P. Morgan in a little while. Down, mixed really, but you got some of the big banks down. Not doing much for this market because why? I'll explain why. I'll do it right now. You see, what I use here, these technical tools, I have a huge Sears and Roebuck, the old Sears and Roebuck heavy toolbox. And in that toolbox, I have got tools for every occasion. And the most important occasion is that as you're getting to the end of a particular move, so more and more of the indicators drop off. You know, I love when you look back and you can identify back in, I got charts going back to 1920. I can find troughs and I can find peak D's, E's, and F's all the way along the line. I cannot say to you, oh, my God, if you just identified this particular low bar, it's just the most amazing thing. It happened every time. And, you know, when you're in it, you don't identify it until you look back historically. How many people are going to identify the major top that will be coming at some point in the future? I bet there will be just like a handful of people. And afterwards, they'll all look back and say, geez, there was this unbelievable indicator. When you're in the indicator itself, you've got to constantly be honing to find out which of your indicators is the one. You remember when I got the buy signal at the Dow, March the 6th at the very bottom? I had no idea about all. It seemed to me even that the cycle date of the planetary was it was a day late, or it seemed to me like everything wasn't working. I had to go with my peak E in the DOG, the inverse of the Dow, to give me that clue. You've got to use as many tools as possible because many on the way up or down become redundant, like the 200-period moving average. Do I want to look at the 200-period moving average at 14,029 right now on the E-minis? No. It's useless. It doesn't do a thing for me. I want to look at the 9-period moving average at 1543. Understand how you've got to use a variety of tools, and that very often the one tool that you think really is the golden sword, the one that's going to take you to wherever you want to go. As you're in it, that golden sword doesn't seem to be working until later on. You say, "Oh, it was working." So it's very difficult. So I'm looking at this and I'm saying, okay, the MACD, that's the moving average convergence divergence, is still very strong, but not as strong as it was back on the 28th of February. The stochastic is holding beautifully at 96. That is flattening out. That is so beautiful that it says it's going to take a lot for this market at this. I'm talking right now at 11:15, 11:12, whatever it is, on Friday, the March the 15th, Ides of March. For the bears, it's the hives of March. It's been tough. It's been tough. Anyway, so what I'm looking at here is that the weekly chart is still in leg C. Let me just jump over to, while I'm doing this, I'm going to do them both together, and I'll just finish that off, and then we'll go to callers. On the left here, if you're new, that's my daily chart. This is my weekly chart in the middle, monthly chart on the right, and then I usually grab the 120-minute chart just to confirm. So I've got peak F in the E-minis, in the 120-minute chart. I've got it possibly in the Dow Diamonds. And look at this. Look at this channel. Isn't that incredible? Now, as long as it's working, you can talk about this incredible channel, blah, 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 blah. Moment it breaks underneath it, you got to get rid of the channel, say goodbye, that's it, you're done, I don't need you anymore. You got to keep charts as clean as you can. The stochastic, look, the MACD is deflected lower. The stochastic's still at 87%. That's good. So I'm considering that we've got what I said to subscribers about a 1 to a 1.5, maybe 2 day pullback in the Dow, and then sometime early next week, maybe Monday afternoon or Tuesday, we start to try to go to the next leg up in the Dow. And the next leg up in the Dow, if there's no new high bar today and it's options expiration, anything can happen. I don't think there will be. This is what I sent to my subscribers, an extraordinarily detailed report every day. We had only longs in the market letter. We took some small losses in a couple of longs. One was so unfortunate because it was a downgrade. It took us out, and everything I said about this, PETS is the name, PETS, PetMed, everything I said about it just worked out. It's 2 points higher than when we were stopped out. That was my target. It's really upsetting. You know what? We missed an entry point today by 1 penny. I think we'll still get it. It's a little upsetting. It's very upsetting, actually, because it's up about 4%. But that is what keeps us going. We're able to keep going because I have tight stops. And I know that the ones, for instance, we've got a gain of 40% in one stock. We've got a gain of about 16% in another one. So the gains more than make up for these little mistakes. And that's the way you've got it. We've got a short position on right now for the first time in a while. Put it on yesterday, and I don't know how it's doing right now. It is, I can't even remember what it was. There it is. Yeah, it's doing fine. It's down about 2 points, 1.5. So that's the way I want to look at it. And I'm looking at the MACD and stochastic and the Dow still being very strong. That resistance, that one trend line, when you learn how to draw trend lines and that inside track, that ChapmanWave technique, that can really be a help. That is to me, it's a very important tool. And it says this whole area between 14,550 to, it's rising every day, it'll be a little higher, to 14,600 is going to be the very strong area of potential resistance. But my weekly charts are still so strong. Look at this. The weekly chart in the Dow is only in leg B. In the S&P, I think it's leg C. SPX.X. If that's only leg B, that says we cannot get a leg D. Just imagine all of next week there's no new high in the Dow. It means that you cannot get a leg D until you get leg C starting the following week, peak C the next week, leg D the following week. That takes us into April, sometime in April. And I suspect that sometime in April, early May, we're going to get an April-May very sharp pullback. I'm talking double digits. But until then, I don't think so. So I wanted to just finish this up. I think gold is trying to make some kind of a bottom, and all the bottom is it's because the dollar has made a peak E in the Chapman wave. There it is, peak E right there. You know these techniques. There's an instant restart. That's a very important technique right there. And we go to a leg E, and that makes a peak E today in the dollar at 83.17. Very strong support. Stochastics at 79%. MACD's turning down, and it said, "Oh, you remember where I spoke about this? That the dollar will probably not make a recycle probably to an F because of the technique that I use using the MACD and the instant restart." Well, there it is, plop. And that's the technique that I teach in my Master Trader series. Very important. And also in my webinar, especially one on the moving averages, that webinar. So I'm looking at this and I'm saying, okay, so gold, just go to the GLD. The GLD, this is the chart on the left, can make these little arch patterns. And I'm drawing them in, little arch pattern. So, yep, if you want to trade gold for bounce, I think some gold stocks are really, they can bounce very nicely, nice percentage gain. I just wouldn't marry them. I wouldn't get into marry them. I don't know if that's a good term to use. I just wouldn't hold them. I wouldn't get over-invested in them. I would treat them as a trade, and that's that. The weekly chart is still very poor in the GLD, and the monthly chart says we will at some point break the 148 support. So what couple of things, and we go to our callers. We've got gold up 4 at 15.94, silver up 0.09 at 28.90. High-grade copper is holding okay. It needs to be doing much better. It's just okay. And bonds, I'm going to talk about, if I get a chance towards the end of the show, a lot of people have asked me about bonds, and I'm going to treat this as a very quick question because it came in before the callers. And the only thing I'm going to say is the FXB is I haven't updated it. I just got this a moment ago. Is in leg A in a counter trend rally. Treat it as if it was like the gold chart or even a bond chart. So it's at 149.95. It is the inverse of the currency shit. Oops, wrong one. FXB. Is that what the question was? Let me just double check. Whoa. FXP. I knew it wasn't the FXB. FXP. Treated it's the same question. Say the reason why I mentioned it like that is because it had the same. I thought it had the same chart. There it is. Oh no, FXP upside down. FXI is what I was looking at. So the FXP is the ultra short China 25. That's an ABCD. This is actually right now going to B, C, D. I'm going to call this E/A and F/P. And my guess right now it's, I don't want to just jump into this. I'm going to take a little time. We've got callers on the line. I'll be with my callers, Mike and Chris, straight after these messages. And, I hope our caller from yesterday, who had J.P. Morgan puts calls in. I'd like to know how he did. Oh, okay. We'll be back. Dow's down 35. S&P's down 2.5.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. During the break, I also like to answer questions. And there was a question about whether the NQM, that's the NASDAQ Futures weekly chart, June chart, was making an instant restart. It kind of has a little bit of the characteristic because it made a new high within 2 bars. But it came down a little bit too much after D. My suspicion is it's an E, and that it might even go to an F over a period of as the other, it's lagging the other indices, and as the other indices move higher, it's going to just kind of drag on, and it might make just an F, and then we'll have to be careful. If it makes an instant restart, this is only A, and that takes us even longer on the upside than the others. I'd rather be conservative and call it E, and we'll see. It can still go to F. So I hope that answers the question. So now we're going to go to our first caller. We've got Mike in Long Island. Hi, Mike. How are you?
Good. How you doing?
I just need to add one thing. Sorry, Bob in the Den. I'm still expecting leg D early next week above 28.17 in the futures because it made a peak. C, MACD and stochastic are outstanding. Okay, Mike. Sorry. Yes.
I'm looking at Lulu. I wonder if I could go through it and then you can critique some of my thoughts. For instance, on the monthly, I have a double D, one iteration of D and then another iteration of D, a silent doji at 77.13 at the top.
In April, yep.
Yeah, and then looks like the stochastic is dropping off on the monthly.
And that's the MACD, the MACD fast-moving average deflected lower, yes.
Right. Now, on the weekly, I have a D
Correct.
on the weekly, which tops at 81.09.
The week of the 4th of May, yep.
Right. And a terrible stochastic and a possible deflection in the MACD.
Correct, and that's what I call the right shoulder failure in the stochastic at the turn of the year, just the beginning of January, right?
Okay. Now on the daily, I have it. We're just in a leg B.
Correct.
But and here's where I have some caution. I'm short the stock right now, but I'm trying to look at it cleanly. Earnings are coming out next week, and I have a suspicion that it might go higher one more time.
Try to fill the gap, you mean? The gap?
And you also have this this bar on which has a high of 77.96 on the 1st of January over there. And I don't know. I just have a suspicion that we get one more pop up. That's my only concern.
So listen, this is what I'm thinking here. The monthly chart says that even if there's a bounce, the bounce should be limited because everything there is very poor. But of course, it's the most important aspect is how it bounces and holds in the daily chart, because even the weekly chart says, you know what, I could keep making these U patterns, these cup formations, and the cup formation says, okay, I should fail underneath. Here's the trend line right now. Here's the trend line. It goes right to about the 76 area. Well, the gap down had a high in the 4th of January of 72.55. So your risk is 3.5 points to the upside. You can tell that yesterday it wanted to move up with the market. Horrible chart, but it's making, if you can identify patterns and then try to stick with the pattern and say, okay, pattern, you've got to be a chameleon and change your pattern because I can see what you're doing, even though it's kind of a rectangle formation. It's more like the dreaded H, the lowercase h, going to another H, which could have a bigger arch, but that shouldn't happen because 65.31 was the low of the 23rd of January, and 65.19, a lower low on the 26th of February, says you can rally, but you probably won't rally more than to just fractionally maybe above, but probably fail underneath the last high, which was 70.78. So obviously, if this spikes above 70, let's call it 71.30 in the meantime, then yes, it would go higher. I've got a trend line that I've drawn. It's a rectangle formation at the gap, and it says there should be tremendous resistance for this stock in the 73 to, maybe let's call it 73.20 to 73.80 area. So you are short.
Yeah.
What I'm going to, you know what I would recommend is
right.
Because earnings are coming out. When do you say?
This week, sometime next week, the 20th.
Okay, sometime next week. Okay, I'll tell you what. I've already thought out the plan. I'll give you the plan as soon as we get back, and then we'll be back also with Mike and Chris from Boulder, Colorado. I'll be right back. Gee, I hope I can hear from Mark in Denver. I'd like to know what he did. Okay, we'll be back.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Mike from Long Island, New York. We're looking at Lululemon Athletica Inc. It's trading at $69.17 down to $1.30. So, Mike, the more I think about this is what I'm projecting, that sometime in late April, sometime in April, it doesn't have to be late April, sometime in April to May, if at any point Lululemon takes out 65, the low of 65.19 on the week of the 1st of March, if it takes that out, there's just a really good chance by sometime in May, you're looking at a stock that's between 62 and 57. That's the way I'm looking at it in the monthly chart. I'm completely wrong if there's a gap up, and that gap holds in the 75 to 76 area and then makes a new, makes a higher high above the gap up. Then it's saying, oh my goodness, this is just a high-level consolidation which could last a little longer. My analysis still says that later on it should be coming that there's more downside than upside. I could just be off the wall about that, but that's what I'm looking at. So this is my recommendation. You already have a short position. I'm going to make the suggestion that the afternoon of the earnings report, you take a little nibble on the short side, because if it pops, so it pops 4%, 5%, not a big deal, even 6%, because unless it stays there, it should come back again. And if it gaps down, it just gives you comfort saying, look, I've got a short position. I've got a tiny little position that's doing fantastically because I got the gap down. But what it's really saying to you is that the next position you add, you can add with greater comfort to the short side on any pop-up after that. Do you understand my reasoning? So, if my mic is still there. Whoops, maybe he's gone. Okay.
I said excellent advice. I agree with you.
There you are. Okay, so good. You're there. So that's what I'm thinking. So have a great weekend. Thanks for calling. And hey, just I'll check. What date did you say Lululemon is?
March 21st.
Great, March 21st. I'm going to write that down. I might do something with it. Thank you very much for calling. Have a great weekend. Let's go to Chris in Boulder, Colorado. Hi, Chris. How are you?
Basil.
Yes.
Good to talk to you. I hope your shoulder is better and you're serving like Rod Laver.
Well, I'm not Rod Laver. I never have been. Wouldn't mind being able to play like Rod Laver. But let me tell you something. I worked through this thing by myself because the next thing to do was an operation to investigate, and I wasn't prepared to do that. So I worked through it, and I do have some pain, but I've managed to loosen it up so that I can serve. Well, you can ask my opponents over the last 3 weeks. I'm getting back, but all I can say is that as long as I can keep playing very well, I'm the happiest guy on earth. I don't have to be getting back to that very, very fast serve. It's fast enough as it is. I'm just happy to be able to. I don't do any downside smashes. I don't do that at all. But so I'm being very careful. But I am running and playing like the best I can.
Nice. I love doubles because I was always, I did this thing where I would poach the net and sometimes I would go way, way over. I love doing that as well. But you know what the rule is? If you poach, you better get it. It's better you better
get the shot because otherwise the other your partner says, I could have got that. So you got to get it. But I try to avoid getting too close now to the net. We'll see when I go back to doubles in the spring and summertime because my moves are very quick, and I'm trying to avoid the very quick moves at the net. So let's look at you want to look at?
Yeah, we had CMG. I saw something. I just was kind of flipping through charts, and I said, whoa, is that a hat trick?
Well, the hat trick top has already been in.
Ooh.
Yeah, the hat trick has already been in the monthly chart. Made a doji high. Folks, we're looking at CMG's, the symbol, Chipotle Mexican Grill. And we did have a fantastic, just lucky we got short at the right time and the earnings came out, dropped 85, 86 something points. But that's not the issue. The issue is, what have you done for me lately? It's like playing a concert or a sport. It's, your next game is the one that counts. So this is the one. I'm waiting patiently. I've got a peak E perhaps in the weekly chart, but the stochastic is at 86%. The MACD is still good. This is going to come like a bolt of lightning if it comes, and it comes down again. And I'm trying my very best to have patience. It's getting really close because I think I want a market sell-off at the same time to give me comfort so that it can go down. Although this does have the tendency once in a while to go up when the market is going down. So you're looking at it as a potential short, right? Oh, I shouldn't have put words in your mouth. You're looking at it how?
No, it's fine. I was so worried when the market kept going up that I said, I've got to have something short. So I saw that. I said, that's either an E or A in the weekly, but that weekly is strong still. I had a double D, thanks to Mike in Long Island for saying, the
DP. Right, the DP. Folks, we call that the Dolly Parton. Yeah?
I make my notations with, okay, this is the third D in the row, in a row.
That's it, right. Right.
But, okay, D or alternate count C in the daily. And then I had a G or C in the 120. And that's when I saw it at a price point of 325.70. Right. So I looked for a call I could sell, and it was a 335 April.
Oh, yeah.
So
that's what you're in.
That's what I'm in.
Okay, I'm going to suggest you hold on to that. And I'll tell you why. The last 4 days, it hasn't been able to go anywhere, but it is holding quite nicely. My suspicion, as I say, it's making a potential here for one little quick pop to maybe back to the 327. I don't think it's going to go much higher than that. In fact, I would not be surprised if the real test comes, if it can't hold 317, the round number of 4 days ago. If it breaks that level, 315 to 313 will be the target on the downside. Now, I don't have the sell signal in the weekly yet, and that's holding well. Monthly is not good at all. But the daily is making these cup formations, and each one goes up and then it comes down. Can it have one more retest of the high of 334.89? You know, it should have done it already. I think you've got the right thing, because you're getting premium, you're getting everything out of it, unless it really spikes. And here's what I'm going to say to you: your 327 is where you got the position. If this thing goes to 325.90 to 326.30 by Tuesday afternoon or Wednesday morning, then I'm going to say, be a little careful. But I think you've got the right trade, and my suspicion is that it'll be a sudden move to the downside. And if it does that, it's going to quickly test something like it's a 322. It'll test the 315 to 311 area, and then it could bounce again. And what I think it's going to start doing from here is make lower highs and lower lows. But I haven't got the confirmation in the weekly yet, and the weekly is still kind of good. It's a very quick ABCDE. It's walking along the 9-period moving average. I'd watch it real closely, because the most important thing about it is that it is making higher highs, even though it's doing them real quickly, one after the other, walking the 9 EMA. 313, a close in the weekly under 313 says, great. It could bounce up again, but if at any point it goes to the 309 area, it is done for this move, and then it could start going down deeper. I think you got a good position. But as I say, 326.15, I'd be a little cautious. I don't know what I'd do, but that's what I'd be. I probably would want to add to the position. But you know what? Let's leave it as it is right now. You're in correctly. You're garnering the premium that's shrinking. And I'm going to ask you, call me maybe Tuesday. Let's look at it again. Okay?
Maybe Tuesday. I have one more thing in the 120-minute chart.
Yes.
Okay, I saw that pattern. I saw a cup and ladle, and then I saw what looks like a drop bucket. Bucket is your double top pattern.
That's the double top, yeah. But except it went a little bit higher. So that what happened was it went peak A, B, C, D, and then E and F. F was the top, and what it did is it came back deep into the lip. So that says that's now the resistance. That 326.99 high is the resistance to watch. I actually don't think it's going to get there right now. I think you're in a good position. Hey, if you get a chance, call me Tuesday. Let's look at it again, okay?
Okay, I know you've got to.
Yeah, I got a bunch of callers, and I also need to talk about something else. So, John, I really appreciate you calling, and I got John on the line. Oh, John. I don't know if John's there. But, hey, Chris, thanks for calling. Call me again Tuesday, okay?
Thank you. Okay.
Have a great weekend. Thanks for asking about the tennis.
You too. Sure.
Dan in Reading. Let's go to Dan. Dan, you there? Yep, Dan's there. I can hear the echo. Dan, you there?
I'm here if you are.
Yes. So you want to look at Nokia, is that correct?
Yeah, I have a position from quite a while back, and then I took some off up in the 450 range, and just wondering if I should stay put, get out.
Okay. You know what I'm going to do? I want to talk to you a little bit about this, because a couple of things are going on here, and I first need to scold you. You know that, right? if you held it going all the way down, and then I want to comment on the positions and what I would be doing. So hold on, don't go anywhere. I need to just talk about a couple of things. I don't want to run out of time, because I want to give you a little time to talk about it. One is, we had a caller, John in Poughkeepsie, New York, who was looking at the XLF. All I'm going to say about the XLF right now is that the XLF is in peak C. I suspect it's going to go to leg D. Just like the other indices, by next week it's going to go above 18.48. If you're in it, hold it. John, try to call me back on Monday. It'll be a great time to look at it because it might be making D. I got to talk about that. And then I'm going to just grab, if you don't mind, I'm going to grab, I was hoping to hear back today from Mark, who called me yesterday, one of my subscribers. And I didn't, that was a mistake. I wanted to put it right here. I have to just quickly do this, and then we're going to take some time looking at Nokia. I wanted to show this, folks. We spoke yesterday about, in my opening call, I said to buy the March 50 put, a white lightning put, we call it, because it expires today, at $10. And then to get rid of it at 16, that was yesterday, at 40, and then to hold it into today. Well, what happened yesterday, it went to 0.09 was the low. We got it at 10. And then I don't know what it was, because I was personally going to just hold it all the way through to today. And I thought it hit 16. So I said that we got a 60% gain. But that was when I was talking to Mark to get out, not to get out, but to take a little bit off at that point, because it hadn't worked quite with the price. But I still said, I want to stick with the rules that I have. So that stock today, JP Morgan, gapped down overnight, gapped down this morning, and I said, no matter what, if it wait 1 to 2 minutes at the opening to get the best price at the opening. So that would have been 0.40 cents because it opened at 0.28, but that's not how I knew it would have a bigger premium. So 0.40 cents. And then that's a 400% gain. And then I said, but if it goes to 0.75, grab it and get out. Well, it went to 0.79, so 75 out. That's a 650% gain on the option. And then I pulled back really sharply. Went to a peak C at 90, a peak C at 80. At 89, and now it's trading at 19 cents. That's the speed of these options. Thank goodness. I hope he got a great trade. I just want to mention that because I also, every once in a while, I love to put an option trade in my opening call report. I have so many subscribers who play options who just love to do this, not play it, but they trade options. So we're done there. Now we're going to go to Nokia. Thanks for waiting, Dan. Here we go. Nokia right now is trading at 3.54. Now, one of the things that's happened with Nokia, it went all the way down to 1.63 back in the week of the 20th of July. Now, it's starting to make an attempt at a turn. I used to have this notated. I don't want to spend time notating it other than to say there is a base of support. There was a gap on the 4th of December. The 4th of December, the high was 346. And the next day, it gapped to 355. So 346 was the low. 355 was the high. 355 was the low on the 5th. That 355 has never been filled. 359 was the next low. And that 355 held until 354 was hit on the 26th of February in a left side, right side price time match. But that price time match has created the pattern that I call the H formation. Now, what needs to happen, it's really not a great-looking chart in the monthly, although it's improving. The weekly had a great move from the low all the way to a peak F and has pulled back and hasn't pulled back nearly as sharply as you would expect in this particular pattern. So that gives a little comfort. So this is, first of all, the scolding says that you didn't put your stop in originally, so you wouldn't have had to go through the pain. And I don't have to tell you this, but promise.
I did take half off up top. I did take half off up,
okay.
up
So
around
you took
450. So.
Okay, all right. You are forgiven, half forgiven, but let's talk about the rest. And I'll be right back with Dan in North Reading, Massachusetts. We're looking at Nokia, NOK, trading at $3.54. I'm almost done with the scolding, and then we'll give him a little bit of praise. No, we'll give him a lot of praise. As soon as we get back, Dow's down 29, S&P's down 2. The consolidation day giving peak C.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So, what, Dan, how come you got out when you did? Was that your target price? Was there a particular indicator? What were you looking at to get you out?
I was looking, I wanted to hit the that old low of 448 from, I don't know when it was. Let me see if I can find it here.
Yeah, okay, I know what you mean. You're talking about
from
way back.
December 19th, 11th.
Yeah, 462 back in December, the week of December the 16th, yes.
Right, which it went to. I saw the PCAF and figured I'd take half off.
Okay, so that's great. So now you've taken half off. Now are you still in a winning position?
I am, but obviously it's come back quite a bit.
Okay. So, but, you did take off half. The big issue was, even if you were looking at it as a dreaded H to test in the weekly, the daily to test the low of the 4th of February at 381, it did it with a doji candle on the 21st of February, and then it looked like it was actually going to go back over the 9-period moving average as if it was going to try to be successful, and then it just turned down and the turndowns were very quick. So if you're looking at the MACD and the stochastic of the, if you're looking at the fast-moving average of the MACD, you see how it deflected, and even now it's gone and went positive, but it couldn't hold the price, and now it's kind of flattening out, which says the MACD is still holding the last signal, which was a sell signal, until the beta, the fast-moving average between the slow-moving average, can expand. So what I'm going to ask you to, and you see the stochastic pullback very sharply, but the price is holding quite well. So I think you're right in keeping your eye, but I'm going to make a suggestion, and this is going to be a suggestion. I would not add to it, because it looks to me like it's just going to make arch formations. That's number one. Number two is the weekly says, I've come down really quickly, really sharp. I took out the low of 3.67 on the week of the 11th of January. I'm going to have to work to get back above the 9-period moving average. So here's my recommendation. Stay in kind of what you've got now without reload. You haven't put anything back, right?
No, I haven't.
But you are thinking that you'd like to put some back. That's the way you...
Well, yeah, I mean, I didn't expect it to pull back so hard. If it does turn around, maybe I'll think about it. But like you said, it looks like it's just kind of suffering now.
So now what I'm going to recommend is this. Change your whole attitude. Now what you want to do is you want to get out of the position that's remaining, and you want to get it out as close to 367 to 376 as possible. Why? Because I see H formations coming up. I think the weekly chart is saying the 378 is really strong resistance. It might not hold above there. I would try to have patience to do the whole thing over again, preferably more towards the 1330 to 1315-ish area, 315-ish area. So any bounce, I would seriously think of raising the stop or just trying to get out with another gain in that second half, but not as much as it was before. And then try to have patience. And it's made a left side, right side price time match 1 week. To the day, to the gap. And that says, it's struggling. It's working. It's just working too hard. I'm going to recommend, and as far as your position is concerned, do not take a loss on this on this half of the position. That'll defeat the whole purpose.
Right. No, sounds good.
Okay. So, let's look at it again together, maybe Thursday, but next Thursday sometime. Let's see how it's doing. Thanks so much for calling, Dan.
Thanks, Basil.
Great. So, folks, just in the remaining time, let me just run through what I'm looking at here. INDU. I did have some requests. I'm sorry I can't get to them. And the FXB, I'll do the FXB on Monday. There's nothing to do right now. I need to see where it goes. The Dow, I suspect, even if it pulls back a little further into Monday and maybe into Monday afternoon, Tuesday, will make a higher high above yesterday's high. The S&P will make another high, and then I have to start becoming a little bit cautious. We had a fantastic gain in the DDM that we have, 200% long the Dow from March the 4th. I'm looking at this as a potential leg D, and then we'll assess.